This article is a perfect example of why the FIRPTA form is so important and how a small error on a FIRPTA form can result in huge financial consequences for your buyer if it's not done properly. I'll skim through this article very quickly because this is a similar scenario that happened at the escrow company I used to own. There was a transaction in which the seller was a foreign national, and after the buyer purchased the seller's property, the IRS saddled the buyer with the seller's tax bill. So imagine you're a buyer and you get a tax bill in the mail for the seller that you just bought a home from. That happened at my company. I had to spend a great deal of time on the phone with the IRS learning how it works and how to fix it. And this article is basically the same scenario that I went through. And I'll also show you on a FIRPTA form the mistake that agents make, because if that form is not filled out properly, then the buyer is going to have to take on this. The buyer's going to have a huge headache because they're going to get saddled with a fine and they're going to have to sort it out and possibly sue people to recover money they're paying to the IRS. So let me skim through this article very quickly and then show you on a FIRPTA form what to look out for, that one line where agents make the same mistake again and again that can result in consequences for the buyer. The article starts by saying this Florida couple bought a home from a foreign national. Months later, they received a $30,000 fine from the IRS. Okay, that Brian and Ingrid Zapula found their dream home. They were thrilled. Perfect house for my son. And they bought it for $790,000 in 2020 from two Russians who had built the home themselves. However, a few months later, their dream home became a nightmare when the couple received a $30,000 fine from the IRS, a penalty they say they shouldn't have to pay. The fine is the result of a failure from the seller's attorney to pay the required capital gain taxes on the home, according to this news channel. Foreign nationals, like this Russian duo who sell property in the U.S., are required to pay capital gains taxes. Just to clarify, foreign nationals, and that's what the whole FIRPTA Tax Act is about, foreign nationals are required to pay withholding when they sell a home. Escrow or the settlement agent, I'm not sure why they're saying just the seller's attorney, maybe an attorney acted as the settlement agent, but typically, like on a California transaction, you'll see escrow will take a withholding from foreign nationals, and that is paid just like you have withholding taken from a paycheck. That's paid to a tax agency so that foreign nationals can't just leave the country and never pay capital gains taxes that may be due. So for whatever reason, the settlement agent didn't pay the withholding. However, Brian was told the attorney for the Russian pair had closed his office because of COVID, and he finally submitted the outstanding $79,000 to the IRS, but by then it was 9 months past the due date. He just sat on it. So basically this either attorney or settlement agent sat on it, and there's $30,000 in late payment penalties. And it says, why are the Zapulas, the buyers, responsible for the fine? When Brian contacted the IRS and told him that it was the seller's attorney at fault, he was told by an IRS representative that the only one with an asset we, the IRS, can attach to is the buyer. So just keep that in mind. Even though the seller is liable for a capital gain tax, should there be one, it's the buyer that the IRS goes after. And that's what I had to learn through the hard way. This was years ago. When this buyer at my escrow company was upset because they were alleging that, or they were inquiring, they weren't even alleging because they were trying to figure out what was going on, that the settlement agent, an escrow officer that worked at my company, hadn't properly submitted the IRS, the withholding for the FIRPTA withholding for the foreign national. So I'll finish this article and I'll explain on a FIRPTA form how to avoid that. And even though the mistake was made by the attorney for the sellers, the IRS rules allow the IRS to pursue the home buyers for any outstanding balance. This is actually a very poorly written article, by the way. Legally, the attorney who was hired to pay the IRS is responsible for the fine, he explained. But Congress has created a lazy way to get the money by going after the buyer of the house. Legally, the IRS can do this, but it's not the right thing to do. Okay, so this is all very editorialized. So this would then force the buyers to sue the attorney for $30,000 that they owe the IRS in penalty fees. Okay, and just to kind of finish this article, to conclude it, they're saying that in this case, the Zapulas, those are the buyers, resolved the situation after contacting this heroic news agency who reached out to the attorney, and then the attorney got involved and was more than willing to cooperate and ultimately paid the IRS. And although Brian and Ingrid's 30,000 headache has been resolved, their situation serves as a warning about the complexities of real estate transactions involving foreign nationals. Okay, so that's the takeaway of the article. I'm going to switch over to a FIRPTA. Now, let me tell you quickly at my escrow company what happened. So in this case, the buyer received a bill, and I was going through the file, trying to figure out how this happened, because my escrow company at the time, the escrow officer, did in fact collect withholding, FIRPTA withholding. And you'll see escrow companies have their own FIRPTA document, in addition to agents that use CAR forms. And everyone should be diligent about FIRPTA forms, because if they're not, the buyer's going to get saddled with the bill. And if a buyer called me and said that they had been levied a penalty due to a foreign national seller, I would immediately know that someone didn't do their job properly, whether it's the settlement company and or their real estate agent. Now, in my situation, after several hours of phone calls with the IRS and just going through records on an old transaction, we determined that the payment was indeed sent to the IRS, but for some reason, it wasn't attached to that foreign national's withholding account. So the IRS received the money, they just didn't properly apply it to a particular taxpayer who was a foreign national. Once we connected the payment that was remitted to the IRS with the foreign national, it was all resolved. But not after a huge headache and a buyer freaking out thinking that they're on the hook for what the seller should have withheld from their proceeds, the seller's tax bill. So just keep that in mind. Your buyer can and will be saddled with a seller's tax bill, a foreign national seller's tax bill, by the IRS. Now let me jump over to a FIRPTA form and show you how to avoid that. We are now looking at the CAR Form AS, Seller's Affidavit of Non-Foreign Status. This right here is an affidavit saying that the seller is not a foreign national, not subject to that withholding we're talking about, okay? And now this is what's important. This is on every file, not just a file in which the seller is a foreign national. Now let me show you the error that agents all make. It's very frustrating because that error gets made again and again and again. This form needs to be filled out entirely. I put the address here just so I could export this form and show you, but the seller's name, you need to check the box if they're an individual or an entity. But let me show you where everyone gets it wrong. Right here, this line. See that? Social security number or tax ID number, okay? This is always left blank. If this is left blank and the IRS calls your buyer, or how about this? The IRS sends a bill to your buyer, and your buyer calls you or the IRS and asks, and you said this is blank, your buyer's out of luck. Because when I talked to this representative at the IRS, if you have this collected, this tax ID number here, it shows that the buyer exercised their duty to collect all data they can. They have an affidavit from the seller. So the buyer could not have known. The buyer could not have been ignorant or reckless or negligent, or however you want to phrase it. The buyer exercised all the diligence they could to ensure that the seller is not subject to withholding. And so this was the make it or break it clause when I was dealing with this issue and in communication with the IRS. And this is left blank all the time. And if this is left blank, this form's worthless. This form cannot be used because it's incomplete with the most important item on this form, which is the tax ID of the seller. And each seller, let's say it's a couple, each person in that couple has to fill out their own FIRPTA form. Okay, now some people freak out. They don't want to put their social in here. They think the buyer is going to do identity theft, I guess. I mean, I think you're being hyper vigilant, and I'm very careful about fraud and that sort of stuff. But I think this is silly. But let's say someone's uncomfortable. Okay, fine. We're here to accommodate our clients, right? Use the qualified substitute form. Okay, you can't see it all. This is the form QS. And this is because escrow, or the settlement company, the title company, however you want to phrase it, they're going to have their own affidavit from the seller as to whether or not the seller is a foreign person. And so you can have the seller, and it says right here, qualified substitute. That's what QS is. If you don't have an AS form, you must get a QS form. And then you put the name of the attorney. So in that Florida case, there was probably an attorney right here responsible for closing, and the attorney put their name. And the attorney should have had all their information on record. Either way, that attorney fixed the problem and paid the penalty. But some people aren't that lucky. So if you have a qualified substitute, you have to write that in. Now, if it's an escrow company, you write in, ABC escrow right here. You have the seller's name. The qualified substitute, meaning the escrow officer, whoever's in possession of the affidavit signed by the seller, needs to sign this. It's really simple. The seller needs to sign an affidavit saying whether or not they're subject to this withholding for foreign persons, okay? And if they're not going to do it on an AS form because they don't want to show their social, then it needs to be done on a QS by escrow, showing that there is an affidavit somewhere, and that somewhere is escrow. And escrow needs to sign it, but someone needs to sign your form. Someone needs to step up and give you an AS that's complete or a QS signed by escrow, so that if the IRS ever comes to your buyer and says that this seller owes taxes, but they're gone, but you know who's not gone? You, the buyer, and you even have a home. That's collateral, and we like collateral at the IRS. And then they go after you, the buyer. So that's the problem. And as unfair as it sounds, I mean, I don't make the rules. I'm just telling you because I got stuck in this nightmare before. And we sorted it out. Thankfully, we matched the payment with the seller, and it worked itself out. But it taught me a very valuable lesson. Don't accept a FIRPTA that's incomplete. Don't accept a FIRPTA without a tax ID number written and signed by each seller, or a qualified substitute form, QS, signed by someone like an escrow officer or escrow manager. That's it. That's how you prevent the penalty being levied on your buyer and your buyer coming after you. Hope you found this helpful. Thanks for watching.